be seeing on understanding of financial statements. So I've taken the annual report of Hindustan Unilever Limited of 2013 and 14. So as we're going to analyze our workings from year 2010 to 11 till 2020 to 21. So ensure that you download all the annual report and start reading one annual report, so that we require such informations to be taken into Excels. Now, when you talk about the annual report, so what I have to go into the annual report. So here you come over here. So in this page you find that you have to see something on the financial performance. So it gives the company's 10 years financial highlights. It will just give you the highlights. Then you go for the business model, how far the business model is there, how it is working. Then you go for the director's report and management and discussion analysis. It will give you the small report on the key ratios and the performance ratios, which is shown by the which is shown by the internal financial analyst, and they will be working, and they have their own workings, and they will be showing that to you with the help of the performance key ratios, right? So then our main purpose is to get into the financial statements. So you find that the financial statement has two financial statements. One is standalone financial statements and the consolidated financial statements. The standalone financial statement, it represents that the company has only standalone numbers. So what does that mean? It means that it does not include any subsidiaries financials. So there is no inclusion of the if the company is having the subsidiaries, no financial variables will be included into the standalone financial statements. So the consolidated financial statements will include the standalone financial statement and its subsidiaries financial statement that we have already. This is the basic thing that will be that has been seen in your cash flow state, consolidated financial statement in accounting standard itself, right? So we are more concerned with the consolidated financial statements. So now when I drag down, so we find that these are the past financial highlights that they have given. So 10 years financial highlights, so 10-year record. So here we find that the gross sales in year 2013-14 is 28,947.06, which is in crores, right? So then you have the profit before tax, PBT, they have 4799.71 crores, right? Then you drag it down and you find the segment wise sales also, what they do: soap and detergents 49, then personal products, beverages and packaged foods and others. Then they have given the key ratios. So you find the PAT, profit after tax, which comes around 12.3%. so in previous year you find that in 2012-13 it is 12.4. now it has become 12.3, so that is a reduction of the 0.1. Then what is the return on net worth? You find that the net worth of the company is increased from 94.7 to 104.1%, right? So these are the identical measure. These are the key metrics that we have to identify and start having an assumption of how the company is performing, because ultimately we have to just pull the data from the financial line items, and we'll also be calculating the same ratios, but maybe the value may differ if there is some adjustments to be made. So when we talk about the financial statements, financial statement has to be read as per the requirement of users. So there is two way of reading a financial statement. There a financial statement, a maker of financial statement and a user of financial statements. So from an analyst point of view, we are preparing the report for the investors and the clients, and we have to just interpret the information from the users point of view. So we are also in users, right? So we are the users of financial statements, so we are also investors. So as an analyst, we have to read the financial statement in the point of view of users. So investors could be non-finance managers or non-finance executives, or they don't have any knowledge in finance also. So we have to deliberately and very deeply give them the clarity on the performance of a company to be shown in our report. That is very important, right? Instead of putting the jargons, that is not quite well enough, but that has been discouraged by the clients, right? So we ensure that whatever the terminologies that we give to them, that should be jargon free. Next, coming to the chairman statement, this is also very important. And here he will be discussing on the performance of the company. So here it says that the financial year ended 2014 was another successful year where, despite a challenging environment, our business grew well ahead of competition. Several innovations were launched to meet the emerging needs and aspirations of consumers. We expanded our reach and further strengthened our distribution so that we can serve our consumer better with our wide range of product offerings. At the same time, we continue to make significant progress on our Unilever Sustainable Living Plan. So you should know what is this Unilever Sustainable Living Plan? What does it mean, right? So in a single of looking of the annual report, we can't able to interpret what is happening over here, right? Then in the same way, if you find that in between in 2013 we significantly increased our Shakti network, adding over 17,000 Shakti entrepreneurs. So who are these Shakti entrepreneurs? So they're talking about Project Shakti. So Project Shakti entrepreneurs completed by over 50,000 Shakti monthly male members of the Shakti family who distribute company products on bicycles, right? So now this is having they're having some plans, right? Then you find the supply chain overheads and the improvement in the effectiveness of our trade and marketing spend. So the chairman is saying that these are the areas that we are progressing day by day, right? So then he is giving also the financial performance that we have. The profit before interest and tax, which is PAT, grew from 7.7% to rupees 355 crores, with net profit at 3,867 crores, growing to 2%. So this all be the assumptions that we can take from the company with the help of the chairman's statement. Then one more thing that what you have to look into is that the business model. So this is the business model. What is the business model they are having? So the inputs to our business model, like those of all major packaged goods manufacturers, are threefold: brands, people, and operations. So this so they have the USLP, right? So this is a key differentiator of their business model. So every company does not have the same business model, and you should ensure that the business model differs from company to company, even though they are in the same sector. So that is also be kept in the mind, right? So depending upon that, only we can able to pull out the information, and we have to do some adjustments, right? Then the outputs of the models are threefold: sustained growth, lower environmental impact, and positive social impact. So now this shows that how they actually work, right? Now next information that we have to get into is the financial statement. So let us get into the consolidated financial statement, directly into consolidated financial statement. So just drag it down and we directly get into the financial statements. So this is the report, right? So this is the report they have given. This is the this part is also be seen in the annual report, that is director's report and management and discussion analysis. This is also important, right? So you have to see the director's report and management discussion analysis is very important, and it will show the standalone performance. They have shown the revenue from operations. They have 28,019.13 crore, right? Then similar wise, the category wise, that is segment wise, soaps and detergent, how the sales has been performed, and for personal products, how the sales has been performed, and for beverages, how the sales has been performed, and packaged food, they have 1620.75 crore, and other inputs including exports, chemicals, infant care products, and water. So they have the sales of 1,071.63 crore. Now this will give you a little bit of putting the how the values can be adjusted. So then they have given the summarized profit and loss account, where they are getting the profit for the year. So profit for the year on 2014 is 3,867.49 crore, right? So now we get into, this is your Mdna, right? Mdna, it says something on economy and markets. So here they're projecting something about the economy. So the year witnessed divergent growth globally, led by the strengthening of US economy, uneven and subdued growth in the euro area and Japan, coupled with a slowdown in developing and emerging markets. So now they are giving the how far the economic factors are affecting, right? So in the fundamental analysis, right, say that first you have to see the economic factors, then the industry factors, then the company factors. So here they are mentioning on the economic factors what is happening and what is not happening, right? Then here they say that in the domestic market, growth continued to be muted with a second successive year of sub 5% GDP growth. The year saw steep currency depreciation in an environment where industrial activity remain in contraction mode. Consumption demand continued to weaken. So they say there's some factors affecting them, right? While lackluster capital goods production pointed to stalled investment demand. So this has to be taken into key point into us while from the user's perspective, right? And with your sluggish growth across the larger economy, further compounded by higher consumer inflation and weak sentiment, market growth across FMCG categories moderated throughout the year in both volume and value terms. Then they say the discretionary categories and premium segments are particularly under pressure. So they say there is some hiccups which they are into the specialized areas, right? So premium segments, specialized areas where they feel little bit of lower sales, right? This has to be seen. Then the operating context for the year was challenging, giving the backdrop of market slowdown. So they say that there is an economic slowdown, a volatile input cost environment, and heightened competitive intensity. So this also the difficulties they are facing, right? So these are the small factors that company has to regulate. So every business firm has to face some factors. So without risk factors, you can't able to survive, right? So that is the part of the business. So these are the economic risk factors that they are highlighting it, right? Then they are highlighting on the performance of businesses and categories. This is similar to the things that we have done with the segment reporting of AS17, where performance of geographical segment wise or performance over product or services segment wise, right? So this categorization has been done, and you can see what are the personal care products they are having. So they're having the soaps and detergents, then personal care products, right? And you have the food and beverages. So in food and beverages, the portfolio of company comprises tea, coffee, processed foods, frozen desserts, ice creams, bakery products, and out of home operations including brew world coffee. Then you have the packaged foods. They have the packaged food segment of the company, right? It's a product based segment as per your segment reporting of your company, comprises culinary products such as jams, ketchups, squashes under Kizan, soups. So Kizan is a brand, right? Soupy noodles, meal maker under Nor soup, right? You have heard that, right? Staples, atta, salt, Annapurna, bakery products under modern bread, right? So you have heard the modern bread, right? And frozen desserts, ice creams, and quality walls and Magnum, right? Then this segment delivered 10% turnover growth with a segmental profit growing from by 65.5% during the year. So they say that the segmental profit is growing from 65.5% during the year. As your company continue to drive efficiencies and mix while continue to invest in building this business, right? Right. So these are the then you have the financial statements. So we then will get into the financial statements directly. So let us get into the financial statements. You have corporate governance, then you have the report, right? Coming to your financial statements. So this is very important. So we are more concerned with the financial statements. So here, when we talk about the financial statements, the company normally showcases the performance through the financial statements. So financial statements, we call it as the profit and loss account, balance sheet, and cash flow statement. So we have to understand each of the statements from the user's perspective, not from the company's perspective, because we have to write the report as per the client's requirement, because clients are putting money into the company. Maybe they will buy the company or sell the stocks of the company. So it's depending upon the decision taken by the company, but as an analyst, we have to give them very lucid information in interpreting the financial statements, right? So in this profit and loss account, this is your profit loss statement of profit and loss. So this can also be said as an income statement, or the statement of earnings, or we can say the statement of operations. So now you find that the revenue of the company is given in a particular period. Okay, this period is what 31st March 2014, right? Normally we have the expenses, okay, incurred during generating the revenues. This and all we have to see. Okay, for generating the revenue, some expenses could have incurred. Then we'll be seeing something on the tax and depreciation and the earnings per share from the income statement. So first thing is that here we have to see the how to read the income statement. So now when we talk about the income statement, we in the corporate sectors, or normally you find that the analyst will be talking with another analyst, or the users will be talking. They say they will be talking on, say, type top line item. So top line of the company. So tell me something on top line of the company. So what is the top line of the company? So normally top line of the company are the revenues, right? So revenue side is the first set of numbers that company has to present, right? That is very important. So now when you talk about the top line, right? So here you have the statement. They have given the statement of profit and loss. It is not account, right? It's a statement of profit and loss. And what is the year ending? Year ending is 31st March 2014, right? So this is an annual statement, right? So when you talk about 31st March 2014, it is an annual statement. It is not quarterly report. So that you have to think, right? So depending upon the dates, it will change, because the income statement is for a particular period. It could be see, normally particular period could be tomorrow or day after tomorrow. It could be any date, right? So that is particular period. So ensure that you see that the date has to be carefully seen, so that the values should be adjusted as per the requirements. Now you have the 31st March 2014. It means that the financial year is from 2013 to 2014, right? So we can also talk it as FY14. So FY, financial year 14 also, right? Now next thing that you have to see is the currency. So what is the in the what currency they have given? Here they have given the amount in rupees crores, right? So 1 crore is equal to 100 lakhs, right? So 1 crore is equal to 100 lakhs. So you can read on those areas, like converting the crores into 100 lakhs also. For our purposes, for interpreting that, we just represent it as 1 crore, right? Now the first thing that we are going to see is here, from you find that the year ended, so 31st March 2014, and you find year ended 31st March 2013. You find that two sides has been given here, right? So this is your present side and this is your previous year. So this is your current year, that is 31st March 2014, and this is your the previous year, which is right side of this one, right? So 31st March 2013. So two sets of values is given, because whenever you put the value into the Excel, you should start from 2013, 14, 15, 16. Ensure that you copy the values from first right hand side first, then you copy the values from the left hand side. So the confusion should not be there, right? Then they have given the notes over here. So notes is a section. Notes is a section, or we call it as schedule, okay, where it will just give you the breakup of the revenue from operations, right? So here the first thing that we have here is the revenue from operations. So this is the your line item. So we see, so these are your line items. So these are your individual line items. So this revenue from operations is a line item, excise duty is a line item, revenue from operation is a line item, other income is a line item, total revenue is a line item, expenses is a broad thing, and cost of materials consumed is a line. These are your line items, right? So the first line item that we see is the revenue from operation, which is gross. We typically call it as the gross sales, right? So now here you find the gross sales for the year ended on 31st 2013 is 27 to 83.59 crore and 29,557. So you have the revenue from gross sales is on 2014, you have 29,557.90. Now we can see and take the breakup of this one in the note 27. So I'll just go to note 27. So you can go to the note 27, go to note 27. So here we have the note 27. So in this you find that the revenue from operations, the sale of products, right? So sale of products, they've given 28947.06, and they have the other operating revenue. So within that gross sales, it has been other operating revenue has been included. So in this we can see the breakup. So income from services rendered to the group companies, which is 479.57 crore, and others including scrap sales, export incentives, commission, lease, license fee, which is 131.27 crore, right? And here they once again they are breaking up sale of products that should be referred in note 38. So we just directly get into note 38. So we get directly into note 38. So we get into the note 38. Yeah, this is your sales. Now this is what we have to look into. So this is the breakup of the sales that they have given. Sales including exports, okay, and net of excise duty. So soaps, you have the sale of soaps 4694.54, right, crores. Then you have synthetic detergents 6539.82. Then you have personal products 8092.72. Then you have tea 2577.98. Frozen desserts 454.91. Then they have the processed triglycerides, hydrogenated oils, vanaspati 23.27 crores. Canned and processed foods and vegetables 770.20. Then others, what is this others? So others they have referred here. Others include the coffee, scorers, water, marine products, agri commodities, infant care products. So now this will just, when you just see the breakdown of the information, that will really help you out in what to have a better interpretation about the company, right? So next thing that we have to see on the is the other income. So what does other income mean? Let us get into the income statement. So coming to your statement of profit and loss. So coming to your statement of loss, here we find that revenue from an operation, which is, so here we have the next line item, which is your excise duty, right? The next item is excise duty. The company would have to pay the excise duty to the government, and the revenue has to be adjusted. So when you do the adjustments of the excise duty, you'll be getting the net sales of the company. So this is your net sales of the company, right? So net sales of the company for 31st March 2014 is 28,019.13, right? Next, coming to your other income, right? So other income is the income which is not the part of the business operation. The income which the company is generating is not the part of business operation. So what is the other income? But here they have included the other income into that, but we should not include the other income into that while pulling out the data. So we have to show the other income next to EBITDA or before EBITDA, right? So next to EBITDA or before the EBITDA. So that we'll be seeing when we get into the evaluation part. Now other income is in note 28. We just get into the note 28. So in the note section, so right, so this is the note section. So in the other income, you find that these are not the part of operations of the company, right? So interest income on bank deposits, they are getting 204.44 crore. Then others, including interest on income tax refund, which is 53.58 crore. Then they have the dividend income from subsidiaries 90.66. Then current investments 8.78, and from non-current investments 4.49. Then net gain on a sale of current investments. So they are selling the investments and they are getting the profit out of it as 259.08 crore in 2014. Right. So once this has been done, this will give you the revenue, right? So the total revenue can be done with the help of the product they sale and adding the other operating revenues. That is very important. That will be your total operating revenue of the company. So let us get into the income statement of profit and loss, right? So this is the part of your revenue. The total revenue that we have is 28,640.16, right? So this other income should not be included because we have to eliminate this. It's very important. While doing the adjustments, we do that. Next comes your the expenses.